Welcome to Wednesday's Comprehensive Market Analysis. I'm Maya, and it's September 11th, 2025, CPI Day, one of the most critical data points ahead of next week's historic FOMC meeting. Bitcoin has surged to $113,961, up 36.2% over 6 months, while our macro dashboard shows an incredibly BTC-friendly setup, Fed funds stable at 4.33%. VIX collapsed 44.1% to just 15.04, dollar weakness with the trade-weighted index down 4.6%, and money supply growth accelerating. Most remarkably, we have 44 economic releases scheduled today, with Consumer Price Index and FOMC press release taking center stage. With social media sentiment remaining fragmented but macro fundamentals screaming risk on, how do you interpret this perfect storm setup for Bitcoin ahead of the Fed's decision?
Maya, this macro constellation is textbook Bitcoin bullish across every major indicator. The Fed funds rate holding steady at 4.33%, while the VIX collapses to 15.04 creates the perfect Goldilocks environment. Monetary policy remains accommodative without panic selling. The dollar's 4.6% 6-month decline against major trading partners directly benefits Bitcoin as a dollar alternative. Most importantly, the yield curve normalization with the 10Y, 2Y spread up 47.1% signals recession fears are fading while maintaining Fed cut expectations. Maya, when you combine this with money supply growth accelerating to 2.1% and reverse repo usage collapsing 78.6%, you have maximum liquidity deployment into risk assets. The credit spread tightening of 10.9% on high-yield bonds shows institutional appetite for risk, while Bitcoin's 36.2% 6-month performance attracts momentum flows. Today's 44 economic releases, led by CPI, will either confirm this disinflationary trend or provide the Fed cover for more aggressive accommodation.
Our social media sentiment monitoring shows a curious disconnect. While mainstream financial Twitter remains divided on crypto, the 4chan boards show general debates about crypto versus tech stocks and French economic policy, but lack systematic sentiment analysis for market implications. How significant is this absence of clear social sentiment signals?
Maya, this sentiment vacuum is actually incredibly bullish from a contrarian perspective. When retail social media lacks clear directional conviction, while Bitcoin surges 36.2% in 6 months, it suggests institutional money is driving the move without retail FOMO yet activated. The fragmented discussions about crypto versus tech stocks indicate retail hasn't fully embraced this cycle, leaving maximum upside potential intact. Maya, historically Bitcoin's most explosive moves occur when social sentiment is either absent or divided, while macro fundamentals align perfectly. Exactly what we're seeing today. The lack of euphoric social media chatter at $113,961 suggests we're still in the institutional accumulation phase rather than the retail mania phase. This creates asymmetric upside as the macro setup, stable Fed policy, dollar weakness, VIX collapse, credit spread tightening, attracts professional money while retail remains skeptical or unaware.
The VIX collapse from 26.92 to 15.04 represents a 44.1% decline in 6 months. Given this dramatic volatility compression, how does this impact Bitcoin's risk profile relative to traditional assets?
Maya, this VIX collapse represents a fundamental volatility regime shift that dramatically enhances Bitcoin's institutional appeal. When the VIX falls from 26.92 to 15.04, it signals market confidence has returned while fear premiums have evaporated. For Bitcoin, this creates perfect conditions. Institutional risk budgets expand, while Bitcoin's own volatility appears more manageable relative to previous periods. The key insight is that Bitcoin at $113,961 with VIX at 15.04 looks less risky to institutional portfolios than Bitcoin at lower prices with VIX above 25. Maya, this volatility normalization allows pension funds, endowments, and corporate treasuries to increase allocation limits. When combined with the dollar's 4.6% decline and credit spreads tightening 10.9%, Bitcoin transitions from speculative hedge to institutional diversifier. The timing is perfect. Macro conditions support maximum institutional adoption, while social sentiment remains fragmented enough to prevent retail front-running.
Today's economic calendar shows 44 scheduled releases, with Consumer Price Index and FOMC press release as the marquee events. Given this data density, how do you prioritize the signal versus noise for Bitcoin positioning?
Maya, with 44 releases today, signal prioritization becomes critical for positioning. The hierarchy is clear. Consumer Price Index dominates everything as it directly impacts Fed policy expectations for next week's FOMC. A CPI print below consensus would confirm the disinflationary trend, giving the Fed cover for aggressive accommodation. The FOMC press release provides secondary confirmation of policy direction. Weekly unemployment claims matter given Friday's catastrophic NFP data, but won't override CPI implications. The remaining 41 releases are largely noise unless they show extreme deviations. Maya, Bitcoin's macro setup is so overwhelmingly positive: stable rates, dollar weakness, VIX collapse, credit spread tightening, that today's data needs to be dramatically worse than expected to derail the trend. My base case: CPI confirms disinflationary pressure, unemployment claims stay elevated, Fed maintains accommodation bias, Bitcoin breaks $115,000 within 48 hours. The data density actually works in our favor by preventing markets from obsessing over any single data point except CPI.
Given the macro setup and today's CPI release, walk me through your Bitcoin trading scenarios with specific price targets and probability assignments.
Maya, here's my framework with Bitcoin currently at $113,961. Scenario 1. Bullish, 60% probability CPI below expectations, dovish FOMC tone. Target 1. $125,000 representing 9.7% upside from current levels. Target 2. $135,000 representing 18.5% upside. Stop loss. $105,000 representing 7.9% downside risk. Scenario 2. Consolidation. 30% probability CPI in line, neutral Fed communication. Range, $110,000 to $120,000 with range trading opportunities. Scenario 3. Bearish, 10% probability CPI surprise to upside, hawkish Fed pivot. Target, $95,000 with stop loss at $105,000 break. Maya, the risk-reward asymmetry strongly favors the bullish case given the macro setup. Position sizing remains maximum 25% of portfolio with 2 to 4 week time frame. Reserve 30% cash for averaging down opportunities. The key insight: macro fundamentals are so supportive that it would require a major policy error or external shock to derail the uptrend. Current positioning offers 18.5% upside potential against 7.9% downside risk. Textbook asymmetric opportunity.
Tom, you've consistently emphasized we're in Bitcoin's final institutional adoption phase. With today's macro data showing such Bitcoin-friendly conditions while social sentiment remains fragmented, how close are we to this transition completing?
Maya, we're extraordinarily close to completion, with today's macro configuration providing the final confirmation. When Bitcoin reaches $113,961 with Fed funds stable at 4.33%, VIX at 15.04, dollar weakening 4.6%, and credit spreads tightening 10.9%. While social sentiment remains fragmented, you're witnessing the exact moment institutional adoption overwhelms retail hesitation. The key indicators: Bitcoin's 36.2% 6-month performance attracts momentum capital, volatility normalization enables larger institutional allocations, macro conditions eliminate traditional portfolio hedges effectiveness, forcing Bitcoin adoption as the only asymmetric hedge available. Maya, institutional adoption completes when 3 conditions converge: macro necessity, dollar weakness requiring alternatives, risk budget expansion, VIX collapse enabling higher allocations, and social sentiment fragmentation, preventing retail front-running. All 3 exist today. Next week's FOMC decision will provide the final catalyst as rate cuts confirm Bitcoin's monetary debasement thesis while eliminating bond yields as competition. We're not years away from completion. We're days away from the final institutional capitulation that drives Bitcoin to $125,000 plus, as the last holdouts recognize there's no alternative.
Given the overwhelming macro bullishness you've outlined, what specific risk management considerations should investors maintain in this environment?
Maya, even with overwhelming macro support, discipline remains paramount. Position sizing. Maximum 25% allocation prevents single asset concentration risk despite bullish outlook. Stop loss at $105,000 represents 7.9% downside protection while maintaining upside exposure. Time frame. 2 to 4 weeks allows macro themes to develop while avoiding short-term noise. Liquidity reserve. 30% cash enables opportunistic additions on any unexpected weakness. The key risks to monitor. Geopolitical shocks could temporarily override macro fundamentals. Fed policy error through excessive hawkishness could derail accommodation thesis. And technical breakdown below $105,000 would invalidate the institutional accumulation pattern. Maya, paradoxically, the strongest macro setups require the strictest risk management because overconfidence leads to position sizing errors. Current conditions justify maximum permissible allocation, but not reckless leverage. The opportunity is generational, but preservation of capital remains the first priority. Success requires balancing conviction with discipline, allocating aggressively enough to capture the move while maintaining downside protection for the 10% probability of bearish scenarios.
Exceptional analysis, Tom. To summarize this critical September 11th assessment for our listeners, Bitcoin trades at $113,961, up 36.2% in 6 months, supported by an extraordinarily bullish macro configuration. Fed funds stable at 4.33%, providing monetary stability. VIX collapsed 44.1% to 15.04, enabling institutional risk-taking. Dollar weakness of 4.6% supporting Bitcoin as an alternative store of value, and credit spreads tightening 10.9%, indicating robust institutional risk appetite. Today brings 44 economic releases led by Consumer Price Index, which will determine Fed accommodation scope for next week's FOMC meeting. Social media sentiment remains fragmented, creating perfect contrarian conditions where institutional adoption proceeds without retail front-running. Trading framework. 60% probability bullish scenario targeting $125,000 to $135,000, 30% consolidation range $110,000 to $120,000, 10% bearish targeting $95,000. Risk management, maximum 25% allocation, stop loss at $105,000, 2 to 4 week time frame, 30% cash reserve. Key insight. We're documenting Bitcoin's final institutional adoption phase completion, where macro necessity combines with volatility normalization and social sentiment fragmentation to create the ultimate asymmetric opportunity. Position accordingly, maintain discipline, and prepare for what may be the most explosive wealth transfer in modern financial history as institutions recognize Bitcoin as the only viable monetary alternative in a dollar debasement environment.